So I started off with a small WhatsApp group with 200 women who were investing in the stock market. And I was like, hey guys, does anyone want to learn about real estate? And it grew from there. And now we're at 15,000 physicians in the community. And we focus heavily on educating people and helping them learn to invest in real estate and breaking down those barriers.
Welcome to the Physicians and Properties Podcast, the show where we teach you how investing in real estate can give you the freedom to practice medicine and live life how you want.
Doctor!
Now, here's your host, Dr. Alex Schlo.
Hello, everyone, and welcome to another episode of the Physicians and Properties Podcast. As always, I am your host, Dr. Alex Schlo. Today's episode is another fantastic one. I'm really glad that you're here, taking the time to listen to another episode of the Physicians and Properties Podcast. Our guest today is Dr. Param Bala. She is just absolutely crushing it, and she's very well known amongst the physician real estate investor space with her platform and community, Generational Wealth MD, and I'm so grateful that I had the opportunity to have her on the podcast tonight. This episode was great. We heard all about her journey in medicine through radiology, and when she focuses on breast imaging, how some factors within COVID and different lifestyle factors and practice factors impacted her decision to start investing in real estate, and how that provided her the opportunity in just 18 months to hit financial freedom and allow her to practice medicine one day per week so she could spend more time with her kids, which was the most important thing for her and is the most important thing for her today. It's been really cool to hear about her journey and see her journey with Generational Wealth MD and how she offers incredible opportunities for physicians to learn about real estate investing and the benefits that has. We talked about passive ownership in real estate, active ownership in real estate, and the spectrum in between, and how that impacts your cash flow and also impacts your time freedom. We talk about different asset classes. We also spent a good bit of time talking about relationships and family and some really cool work that they are doing in a rural town in India, in which they are helping educate kids with disabilities and empowering these kids with disabilities in this rural town in India. This was an incredible episode. I know you're going to gain so much from it. So if you learned something from this episode, do me a favor, subscribe and share it with someone who you think will gain value from it. If you're interested in coaching with Dr. Bala, which I highly recommend, click the link down in the bottom of the show notes to learn. Without any further ado, let's get started with today's episode with none other than Dr. Bala. Dr. Bala, thank you for coming on the Physicians and Properties Podcast tonight. I'm so glad to have the opportunity to talk to you and have you on the show. How are things going in sunny California?
Oh, it's going good, Alex. It's getting warmer. And so we're getting longer days, more time at the park. It's all good.
Yeah. That's the best. Yeah, same here in Colorado. It's been interesting. We got over a foot of snow last week, and then it was 65 today as I was driving back. So my wife called and she's like, hey, we're going on a walk. My son Jack is all about the scooter right now, and he is very fast on it. So it makes me a little nervous sometimes when he's coming up to the street just flying. But luckily, he's smart enough to stop for now.
Good.
So
that's excellent.
Good there.
Yeah, got to keep them safe.
Yeah, absolutely. Absolutely. And I know you have 2 kiddos as well, which I'm sure keeps you on your toes.
Yes, it's always play dates and parks, but just it's important to keep them active. So I enjoy doing that.
Oh, absolutely. Yeah, that's fantastic. Well, again, thanks for coming on the podcast tonight. Really appreciate it. Do you mind telling the audience a little bit about yourself?
Yeah, absolutely. So I'm a radiologist specialized in women's imaging based out of Southern California. And I graduated in 2010 and I started practicing. I was doing what most physicians usually do, the traditional model, working hard. And I was squirreling money away into a stock bond portfolio. And 2019, I think, was a transition point for me. There was a merger at work and I decided it took us about 6 months to get back on our feet between the transition, and it was a little bit of a rough transition. So that's when I started deep diving into passive income and how financially independent I really was. And it was really scary because I thought that I'd done all the right things, a high income subspecialty. How can you go wrong? I'm a saver, but I was saving towards all the wrong things. I had a ton sitting in a savings account, which wasn't really doing anything for me and eroding away in purchasing power. And my stock bond portfolio, I had about $600K at that time. And I realized that there was a 4% safe withdrawal rate. And so I couldn't go and withdraw 10% from it when I was retired. And that allowed me to only maybe pull out about $2,000 a month. And I looked and I live in Central Valley, California. So I have the advantage of geo arbitrage. So I don't really need a lot. I needed about 10,000 post-tax dollars coming in every month for me to be financially free. And I realized I was far away from that goal. And so I just never wanted to be in that position again where my family would go through the same amount of anxiety. And so I started deep diving into financial freedom. What I had also done over the course of the past few years, in 2014, I purchased a rental because I had a colleague. I was teaching him how to read breast MRI. He started teaching me how to invest in real estate. He was a third generation real estate investor. And I'd acquired a couple of properties by then. And looking at the numbers, I realized that I had a third of my money in my real estate portfolio. This was completely passive, just buying a rental, having a property manager manage it, literally not spending any time on it. I had about twice in passive income with a third of my money in it. And so that was my aha moment. I said, if I really needed to have this snowball and get to the point where I was financially free, I really needed to focus on real estate. And so that was the time where I was like, okay, I have a 3-year goal. I'm going to get there in 3 years, get to the point where I have 10K in post-tax dollars coming in. But the pandemic hit and there was a huge transition for all of us. For me, I had 2 little kids. I think they were 1 and 4 when the pandemic started, and then 2 and 5. And I was working from home, juggling, not having childcare, having them be at home all the time. And I was burning out. And one day I realized that this was just no longer tenable. They were in my office sleeping on their dinosaur sleeping bag till midnight because that's when I was done. And I decided that it was time for things to shift. Fortunately, the 3-year goal, I was able to speed things up and really scale my real estate portfolio. It was less than 18 months I got to financial freedom. And so I went down to a day a week in medicine. And we got 2 beautiful years of me being able to spend tons of time with them and go on day trips, to the mountains and sledding, the beach. And so it completely transformed my life. I went down to a day a week in medicine. I had tons of time to spend with the kids. And it was unbelievable how it was simple. It wasn't easy, but it was simple to do. And so I just wanted to talk about it because I didn't hear a lot of people talk about finances in general or investing in real estate and how impactful that could be. And so I started off with a small WhatsApp group with 200 women who were investing in the stock market. And I was like, hey guys, does anyone want to learn about real estate? And it grew from there. And now we're at 15,000 physicians in the community. And we focus heavily on educating people and helping them learn to invest in real estate and breaking down those barriers.
That's amazing. What an amazing story and a cool journey, hitting financial freedom in 18 months, dropping back to 1 day a week to focus on the things that matter most, which is the kiddos for sure. Yeah. And, all that for just teaching someone how to read a breast MRI. True. It would take me 18 months to learn how to read the breast MRI. So about the time it took you to get financial freedom, which is really cool. I do have a question. Was it difficult to kind of transition back out of medicine? A lot of folks I talk to who leave medicine in some capacity kind of struggle with that transition because they've worked so hard to go to medical school and residency and fellowship, and all they've really known in their professional life is being a doctor. Was that difficult for you to kind of scale back the practice?
At that time, about the age that my kids were at, and both of them, last August was when they went back to traditional school. So they were home with me most of the time. I enjoyed the flexibility and I enjoyed being able to go into work a day a week. And I still got to do my procedures. I still got to do what I love doing. In the last 4 months, well, actually it's been a little more than that, 6 months, I am I probably work a few shifts here and there now. So it's less than a day a week. It's almost a day a month at this point. So now it's beginning to hit me. It's hard because it is part of our identity. It's something we work really hard for. And I think most of us enjoy medicine. The burnout is more related to the structure of the job, which is different from medicine. And so I do miss it. The journey now has been because I'm now growing the community, and we have the coaching program and we have the syndication opportunities. And there's a unique responsibility when you're helping other people with their finances. And so it needs my full attention. And so I would love to get back, maybe when the kids are older, but I don't know how that works because I've heard that, they need more of your time when they get older. And so between Generational Wealth and DGW Capital and the kids, it's feel like I'd be doing medicine and the companies a disservice if I continue to practice. And so it is still a hard transition. It's not a path I chose, but I think if I work part-time in medicine, a day or 2 a week in medicine, that would have been ideal. I'm just in a different place right now.
Yeah, absolutely. Well, it's really noble to have the insight to think about that and realize, hey, if I'm going to give something, I'm going to, give my time to something and give it my all, which is really honorable. So I applaud you for that for sure. And it's amazing to see what you've built with Generational Wealth MD and the capital side of that as well. So really excited to dive into that too. I wanted to ask you, so initially buying those rentals, the first kind of 10,000, the financial freedom that you hit in the 18 months, were those long-term rentals, short-term rentals? Were those single family homes? What did the portfolio look like at that point?
Yeah. So the first two properties that I acquired, one in 2014, it was always when I was on maternity leave, right? I had time on my hands suddenly and I'm forced to sit still. So 2014, 2018, those were long-term rentals. I invested out of state. And I want people to hear this because that's what I saw my mentor, my colleague do. He invested out of state. He never laid eyes on his properties. Same thing with my out-of-state portfolio. I've never laid eyes on my property, haven't met my property manager or my agents in person, right? And so that's how I did it. And so during this the transition phase, I read Rich Dad Poor Dad and I was like, you know what? This makes complete sense. And so I plotted it down. I wrote it down on that book in the back. I said 3 properties a year. I'll get to 9 properties and this is my cash flow goal and I can do it. But I realized that was a longer path. It would have taken me much longer to get to it. And even to get to the cash flow number with that, it would have taken me longer. So as I started deep diving, I took some tax courses, asset protection courses, started deep diving into real estate. I realized that if it were long-term rentals, I needed to start rehabbing. So I was forcing equity and I was getting higher cash flow. And so finding the right properties, knowing how to run my numbers and doing that. And I did that without a general contractor because it gave me the ability to tap into some of the tax efficiencies, but also it boosted my returns in many ways. And then I also acquired a short-term rental. And again, I did a rehab on it and I was stacking strategies on over there. And that allows you with the rehabs and with short-term rentals, what you're able to do is you're taking the same pot of money. And when you get those tax savings with short-term rentals, again, you're able to go in with a 10% down loan when you get a second home loan. And when you really materially participate and spend some required amount of time on it in that calendar year, or when you file your taxes the following year, you're able to, because of the tax savings, pull out all of that initial capital. So you're getting 100% ROI. Actually, one of those properties, I got a 200% ROI in 6 months. And this is actually an ebook and you can actually look at the numbers. If you go to our homepage, generationalwealthmd.com, there's a free ebook. Anyone can download it. So I shifted this model from where I was getting a 200% ROI over 6 years with my long-term rentals to where I was doing it in 6 months, doing rehabs and short-term rentals. And so that really helped me scale, and leaning into that allowed me to scale and grow my passive income much more rapidly.
Yeah, absolutely. That's awesome. Yeah, short-term rentals are such a powerful way to expedite cash flow and great tax benefits that you hit on. The cost segregation studies, the ability to write that off against income. It's incredible. We had Amanda Hahn on the podcast, probably about 5 months ago or so now. I got to get her back on because it was great for me to pick her brain and learn more about some tax strategies that I need to implement, because I'll be honest, taxes and Dr. Schlo don't get along very well. I'll probably file mine in October or something. But
I do that too. I always extend. Yeah. But you own short-term rentals, Alex. And so for you understand the power of having some of those strategies where you're able to really generate higher cash flow and then tap into all the other aspects where you make that return from real estate. You're able to use leverage more effectively. You're able to tap into the tax savings and you're not waiting for market prices to increase. You're really able to accelerate your growth.
Yeah, absolutely. It's a great strategy. Well, after that set of investments, what came next for you?
So I was cruising. I felt like, okay, I've hit my financial freedom number, which included everything I needed to maintain my lifestyle, including discretionary spending, travel, and I love traveling. So at that point, it was all about, and then I was down to a day a week in medicine. So I needed something else that I was passionate about that I could focus on in my spare time, which is why I started, when I went for walks with friends, this is all I could talk about. I was like, why aren't you doing this? I figured that I would probably reach out to a broader audience and talk to more people about it. So it was a community building. And then we grew Generational Wealth MD, which initially was essentially helping people do what I did, which is direct ownership of real estate, building your own portfolio, generating those higher returns. And again, even within that, there's a spectrum. You can do anything as passive as buying long-term rentals and having a property manager manage it, to going all active where you have short-term rentals and you're rehabbing them and really boosting those returns. And you get to pick and choose. And so I started off educating. I realized that people needed a more structured program and additional resources like good teams and agents in different markets. And so we built that out. And then as I was doing that, I realized that the majority of physicians probably still wanted to invest passively. And they would bring these opportunities to me and I would ask for detailed underwriting to see what the numbers look like. And it's so hard to get beyond that point. And that's where the conversation would stop. So we then started becoming general partners in apartment syndications. And so that's where my portfolio has since grown. And the big impetus, the reason we started that was because we wanted to bring those vetted, curated opportunities to the community and have control over the deal and be able to really underwrite and help people understand what they were going into. And so then we started educating over there because, again, I don't want people to invest in even in our deals or in any deal just because they trust someone. I think there has to be a level of due diligence that goes with it, which involves vetting the market, vetting the sponsor, which is the most important thing, and really knowing how to look at the deal and say, does it fit your buy box? Because everyone's going to have different criteria. You're going to have different criteria today compared to, say, 10 years down the line. It may be more about cash flow and you can spend more time today. And then later it may be more. So it's going to shift. Right now, it may be velocity of growth for most people. And then it shifts to cash flow over time. So really understanding all of that. And so, yeah, so our growth has been more in the stabilized value add multifamily space, but also in educating people so that they understand how they're vetting deals and making sure it fits their buy box.
That's fantastic. What have you learned about building a community? Or I guess a better question would maybe be like, how important do you think it is for a doc who's listening to this podcast to get involved in a real estate investing community in some capacity?
Well, so that helps on multiple levels, right? So that's a great question, Alex. I think for people, most people, the barrier for most physicians is just not knowing what's possible, right? And so, and this is the space that I was in before I started deep diving into all of this. So you're not really thinking about real estate because you have all these limiting beliefs, these barriers. You're thinking it's risky and you don't know how to tap into it. And so I think seeing what's possible is the biggest part. You're surrounding yourself. You're the average of the 5 people you surround yourself with. And if you're surrounding yourself with people who are just W-2 earners who are investing in the stock market, it's going to be very hard for you to shift and really start. Because ultra high net worth individuals, their asset allocation, 50% is an alternative asset, right? It's not like your regular doctor who has 90% of their portfolio in stocks and bonds. And so making that shift, you need to surround yourself with the right people who are doing those things. And so the community is important. Education, a lot of education happens at the community. I'm sure, you have the podcast, you're educating your community. And that's what we do also. So it's the education, it's surrounding yourself with the right people. And then it's the opportunities, right? And so with the coaching program, we connect people to resources, be that attorneys, CPAs, be that agents in specific markets with whom we have a track record. That's the only way I piggybacked onto somebody else's team. That's how I was able to invest out of state successfully because I had those teams, right? So you have access to all of those resources. And even with syndications, we're bringing vetted opportunities to our community. And that's because, and they have access to those people because they're part of the community. So I think it's like, multiple different ways. Having the right people surrounding you who add momentum and having the education and then all of the resources that are part of the community.
Yeah, I think that's a perfect answer. And the only other thing I'd add too is I think the time savings is huge. If you're already getting into a community of docs and folks who have already done the journey for you, or not for you, but have already done the journey and they're able to expedite your journey, pull you up along with them and just save a lot of time. And so that just greatly compounds how fast you can reach your goals going forward. Yeah, I love that answer. It's such a great answer. People ask me that fairly often. And I say that the best decision I ever made was to join a community. It's actually, it's called the War Room Mastermind. It's for military folks, but that surrounded me with like-minded individuals who are a step above me. Yeah. And I don't know about you. I actually really enjoy being the dumbest person in the room and surrounding myself with people.
That's one of the smartest things you can do is to be the dumbest person in the room.
Which is why I love the podcast, because I'm always the dumbest person on the podcast. And so it's really
that's not true. But I feel like there are niches and areas where we will know less than most people, but like you're doing the right thing. You're in those spaces where you're now elevating yourself to a higher level.
Yeah, it's been a game changer for me. And, that's part of what I love about the podcast, is getting to network with people who are just doing really incredible things, such as yourself. And it's the best. I tell folks all the time that one of the best networking tools is having your own podcast. It just really is. It's a really cool opportunity.
Yeah, that's true. And, like you, I've been part of multiple masterminds and I've had coaches, and I prefer to have, even when I go into programs, I have, there's a group coaching component where you learn a lot because of the questions people ask, but I also have one-on-one coaches. And I don't think I'd ever go back to the point where I don't have a coach, because it completely transforms the way you look at your problems and the way you look for solutions. And so, all of that is priceless.
That's awesome. Yeah. Love to hear that. Well, we've kind of mentioned a little bit about direct ownership and passive ownership. So what does that kind of mean to you? What are the differences? And maybe what do you think the benefits are for doctors and passive ownership in real estate?
Yeah, that's a great question. So I usually say I put doctors into 4 buckets, right? And I think it's very important for anyone going in to understand where they fit on the effort return spectrum. And so you have your, what I call the investors, or passive investors. They don't have a lot of time, or they don't really want to allocate time to educating themselves. They would rather just give someone their money and have them grow it for them, right? So those are your investors. Passive syndications work really well for people like that. And then you have your legacy builders, which I think are people who are okay with owning real estate directly. It's a long-term rental. You have a property manager. It's super passive. And again, you're not getting outsized returns from tax savings. You're not able to shelter your W-2 income from taxes in that bucket, but you are getting slightly higher returns for the amount of time that you're putting in, right? So those are the legacy builders. And then you have who I call the short-term hustlers, which is what I did. I said, okay, I'm going to go in for 2 or 3 years. And remember, real estate is very fluid. Right? You could do something that's super active, say like short-term rentals, like you do, Alex, with your wife. You could do something like that. And then at a later stage, say, hey, you know what? I've tapped into the tax savings. I've gotten higher returns. Now, at this stage of my life, I want to hand this over to a property manager so I can make this passive, right? And so this is the same thing. So I was a short-term hustler. That's where you go in and you do rehabs and you have time, but you are very intentional that you're only going to do it for a few years. You're going to boost your returns, scale your portfolio, and then you move it back into that passive category by handing it off to a property manager. So I call them short-term hustlers. That works for a lot of people who really want to, for a short period of time, get the tax benefits and scale and then go passive. And then finally, I call the last category entrepreneurs, which is where I would say short-term rental owners are, because you do run it like a business. You need to, not just for the acquisition and listing, but even afterwards, managing it, making sure you're occupied, you have visibility, guest experience, all of that, right? And so, like I said, even over there, at some point, if you want to transition and make it passive, you can hand it off to someone. But I do call them true entrepreneurs because it is a business. There is more volatility there. There's slightly more risk, and you really need to understand what you're doing. That's true also for people who are general partners in larger deals, because you have to run it like a business, right? You have investors. And so that's the spectrum. It is an effort return spectrum, and you can choose where you want to be and know that it can change over time. But I think people should be really intentional about it. For a lot of physicians, the barrier is time and having the time to even educate themselves. And so passive investing does work for a lot of people. You are taking maybe smaller returns compared to the rest of the opposite of the spectrum, but it's still significantly higher than what you can do with this traditional stock bond portfolio. So you're still lowering your risk, diversifying. You're still getting significantly higher returns for your overall portfolio, thereby compressing your timelines, getting to financial freedom faster. And it is still very tax efficient, even with syndications, because you're able to defer taxes, and there are multiple strategies around that. So I think that's a spectrum, and people need to be very intentional about where they want to be. We have members within the program who, with just 2 short-term rentals, and you've done this, Alex, they've sheltered in 1 year, right, $800,000 of clinical income from taxes, but they have put in the time and effort to do that, right? So it's $100 and more than anyone else for, each of those properties all combined. And that's what they get rewarded for. And I think people need to be very clear about where they want to be on it. If you are a passive investor, you're saving time. But I honestly still believe that even there, you need to do a little bit of due diligence, like I said. So really know the markets you're picking. You build your buy box even over there. And I say, are you investing for cash flow or for velocity of growth? And what is your hold period? How you, even over there, you need to stratify your risk. And so educate yourself. I highly recommend that. We actually have a guide. It's generationalwealthmd.com/guide in lowercase, which is like, I spent so much time putting this together just because we had so many people come in and say, Param, I trust you. And I'm investing with well, I need you to know really what you're doing so that you're doing your own due diligence. And it's a great place where you can build your buy box, learn how to vet, know what industry standards are, and then come up with a due diligence checklist, which is like a 15, you can pick which questions make the most sense to you, but it's like 15 questions that help you really analyze the deal and see if it makes sense for you. So yeah, that's what I say. Be very intentional about where you want to be on that spectrum. And then also be intentional about your risk return, where you are on that risk return spectrum, and then pick and choose what makes sense for you.
Wow. That was a great answer. I love that. I like the spectrum approach to it, because I think people hear a lot or talk a lot about passive income and think that, hey, I'm going to invest in real estate and that's just going to be a check that's going right to me in the mail. And there is a way to do that with syndications and so forth. But really, passive income is that spectrum. And if you want higher passive income, you got to put forth more time, exactly like you said, and probably be a little bit more active in the investment. And so it's just something that you have to figure out. And I love that you hit it multiple times. You got to figure out what you want. You got to figure out what your goals are. You got to figure out how active you want to be and where you want to be on the spectrum in terms of real estate investing. And I think that's really important and gets missed sometimes. People just jump in and hey, I want to do real estate, and they just, do a shotgun approach. So it's really good to be tactical and really think through what your goals are.
Yeah. And I think people see the person next to them doing it, and then they feel like, okay, well, he's done this successful, so let me replicate that. But I think just knowing that there are so many options out there and picking one that makes absolute sense for you is always the right thing to do.
Yeah, I completely agree. And I think financial freedom is also a spectrum of maybe it's just, we're all looking for time freedom. I mean, that's what we're really looking for, more time to practice medicine and live life how we want to, or not practice medicine at all. And I think that understanding that and that's going to take time. It's amazing that you did it in 18 months, but that doesn't mean someone listening to this podcast can be able to do it in 18 months too.
Yeah,
So
absolutely. It depends on your resources, time, money, how much you have available, and your aptitude. I tell people not everyone is meant to be a short-term rental owner. I honestly believe that, because I see people jumping into it for the tax savings, and then they realize that it's not something that, they don't thrive in that environment. You don't want to put yourself in that position.
Yeah. We got 51 inches of snow at one of our short-term rentals last weekend. And I thought, I don't think I'm cut out to be a short-term rental owner for a bit, because even the plow truck couldn't get back there.
Oh my God.
It was crazy. And fortunately, I guess I was going to stay there. I guess fortunately and unfortunately, their flight was canceled because there was no way they were going to be able to get up there to that short-term rental. It's this cool little geodesic dome in the mountains. It's a really cool property. But anyways, so luckily the snow's melted and there's another storm coming. So hopefully these next guests will be able to get in there. But it's a lot of work. It takes a lot of time, but that time and work and effort has been just absolutely worth it. My wife and I talk all the time about this property in particular. We're like, if we could just buy 2 or 3 more of those, we'd be done. We would hit all our cash flow goals. We'd be done. We'd just be, sipping Mai Tais on the beach, but not doing that many short-term rentals anymore. It's residential assisted living for me, which we really enjoy as well.
Yes. And I feel like you figured out that niche where you're still getting the higher revenue, but with less time going in, which when you have a growing family, that becomes very, very important. And so a lot of our members also do this, where they do short-term rentals, say in a metro area, where they're able to combine that with the short-term midterm rental strategy, where again, you're still getting one of our students who's now one of our midterm rental coaches. She purchases properties that would rent for if it were a long-term rental, it's $2,500 in income, but she's able to rent it out from anywhere from $8,000 to $10,000 a month as a midterm rental. And that's significantly less work, but it does take some time to build those systems, just like you built it out for the residential assisted living, but it can be the same revenue, but with a lower effort. And so you can find those niches where you're able to do that. Yeah. But again, very important to understand the risk and the effort return spectrum.
Yeah, completely agree. And I think folks get really worried about shiny object syndrome. And I kind of look at it a little bit differently of like, hey, you're going to a buffet and you're trying a bunch of different foods at the buffet or a bunch of different real estate asset classes to figure out, hey, which one do I actually want to sit down and eat and really focus on? And so I think that's okay. I think folks are afraid sometimes like, oh, well, I kind of like this and I kind of like that and I kind of like this. Well, it's okay to try some of those different asset classes, figure out what you really like, and then double down and focus on that. And so I think that's something that's been helpful for folks to understand as well.
Yeah. And it's interesting that you mentioned that, because we have some of our students within the coaching program who do short-term rentals, and they thrive in doing that, but they will also invest passively in syndications. And then they're able to, it's like pieces of a puzzle. They'll take the losses from the syndication and use it to offset the STR passive income, which can be huge, because especially if you bonus depreciated in year 1 and year 2 and 3, you'll be throwing out significant cash flow that you're now paying taxes on at your marginal tax bracket. And so they'll plug and play. And so there's, like you said, you test and you sample and you experiment, and then you see what works and you go with it.
Yeah, absolutely. I love that. Well, so tell us a little bit more about Generational Wealth MD and the coaching program and those sorts of things. What does that look like for folks?
Yeah, so we do a lot of free virtual events where we have thousands of physicians join us every year. And oftentimes people are excited. They are listening to this and they are like, okay, well, I really want to do this. And in the past, then I would be like, that's awesome, you can do it. And it wouldn't really materialize because you need education, you need the support system, and you need the community, like we talked about, to give you momentum. And so we run our coaching programs twice a year. And the reason we do them like in cohorts is because then you're doing it with a whole bunch of people who are doing it with you, and it's step by step, and you're listening to them and listening to their wins. So there's the community part, there's the education part, there's the coaching part where we have all these live sessions so that you're not doing it in a vacuum. You're bringing your challenges, and we're helping. We have coaches who have 10, 12 short-term rentals that they're self-managing, and now they have VAs who are helping them run it. We have physicians who own 100 plus units in joint venture partnerships. And so All of us are here to help coach you through your challenges, and then we give them access to vendors. Agents, I think, are the most critical part for someone who's starting out. And like in our conversation, we talked about it too, having those resources, the right person who's going to do a lot of the work. It's almost like having a team member where you're not going and pouring through the MLS every day and trying to find a property that meets your criteria. You give them your criteria, and they're in a position to bring you those properties. They may be off market. They may be just screening through things to see what fits your criteria, but they bring it to you, and then they have property managers who kind of manage it. So all of that, I think those are the biggest barriers for people. When you have those team members on your team, then you're able to like scale, and then all the resources needed for them to take it to the next level, right? Then it's about scaling. And so we have group and one-on-one coaching. People have the ability to tap into that. There's so much momentum that gets added. Like I said, we had one of our students, they spoke at the summit we just hosted, and they got 2 luxury short-term rentals. They started from scratch, didn't really know anything. They also invested in syndications, and they were able to shelter $800,000 of clinical income from taxes in 1 year. And so you can only do $575,000 in a given year, but then the rest rolls over. You use it next year. But it's just so powerful what you can do when you have the right support system. So that's been the coaching part. And it's almost like I had a coaching call this morning, and these are physicians, like people just like us. And oftentimes the story is the same. It's like, I feel like I'm living paycheck to paycheck, and I'm on this hamster wheel, and I need to get off. And I'm just thinking about how I'm going to invest in real estate is overwhelming. So we built out that plan. It's one small step at a time. We chunk it. It's sequential, and you don't have to think about the 10 steps ahead right now. You just need to know what you need to do next. And so it's just like simplifying the process and allowing people to really take action, essentially.
Yeah. I was thinking about the quote, do you know how to eat an elephant? It's one bite at a time.
Yeah.
And it's the same thing with real estate investing. I don't actually want to eat an elephant by any means, but yeah, the adage there is correct. And I think that's helpful. It's easy to get overwhelmed, and the physicians do not get the financial education that we deserve or the real estate education that we deserve. We're spending all our time learning how to be good doctors, which is incredibly important. But I think it almost kind of sets us up for a disservice when we get to the point where we're out of residency now, we're attending, we're making a significant income. And then it's like, well, what do I do? I think there's one of 2 options that tend to happen. It's either we, have that lifestyle creep, buy the new Tesla, buy the big house, and now we're in all this debt, or we figure out, hey, how can I live like a resident, invest as much as I can early on and go from there. And so I think it's really important for folks to hear what you're saying, Dr. Bala, and really important to get in these coaching programs and so forth, so you can expedite that growth sooner, faster, so you can have that time freedom earlier than what would have happened for sure. And I'm sure that doc that sheltered $800,000 is incredibly grateful for what they learned through the program.
Yeah, and I think the reason I call it generational wealth is because you're not passing on necessarily the money, but like you said, the financial education piece that's missing, that's what you're actually transferring to the next generation, right? And hopefully they're doing it much faster, and they're able to hit their goals much faster.
Yeah, absolutely. Well, I wanted to talk about a couple more things, but want to be respectful of your time. I heard you mention before, like the impact investing model. And I wanted to talk a little bit about that, what the impact investing model is through Generational Wealth MD. If you wanted to share a little bit about that.
Yeah, absolutely, Alex. So for me, initially my big why, and like for all of us, you need to have a big why to even get started in this. And so that rough transition, when you're cruising, you're really uncomfortable, but not uncomfortable enough to take big action, right? And so that transition point was really hard. And my why at that point was to have the freedom to spend more time with my kids. And so I hit this goal. And then as the community started growing, I didn't have the same why. And I was looking for what makes the most sense to me right now that actually gives value to everything that we're doing. And I've always I come from a small village in rural India, so in southern India, and I've always wanted to give back. And where I see the biggest inequity is in children in third world countries where they have disabilities. There's a lot of social stigma, and they just don't have the resources. And so ﷺ Gives is the nonprofit part of our companies. And so I take pride in it. I think I want our investors and our members to take pride in it. But we help children with disabilities in rural India with healthcare and education initiatives. And that's been my next why that I've been focusing on. And that's what gives me the energy to continue to grow and do what we do. And I tell our members this: every time you help the community grow, you support us, you're actually supporting the cause, and I want them to take pride in it.
That's really cool. I was going to ask, how can we help support that initiative that you're doing? So thanks for answering that. Join the community, Generational Wealth MD, and do that. What are you guys focusing on or working on there in India, in rural India, for these kids with disabilities, is that focused largely on education for them, or what does that look like?
So we are working with special educators who have schools that are dedicated to children with intellectual disabilities. And so we are giving them scholarships. We're also working on a new school that hopefully, again, there's some legislation around that, but hopefully mid-year this year, we'll start help build and fund the new school that is being set up. But we also help children who need, so we're trying to identify the gaps where the government doesn't necessarily have the resources and insurance doesn't provide for certain things. And so children with sensorineural hearing loss, when they have external hearing devices, cochlear implants, the external component, when that gets damaged, which is very common in young kids, it's not necessarily paid for or covered by anyone. And if these families are families from lower socioeconomic statuses, these children suddenly their progress is completely hindered. So they aren't able to, the goal is to assimilate them from the early intervention centers, to train them and then assimilate them to regular school. So that progress just gets halted. And so we go in and we help sponsor that. There are kids in the district that I'm from, which is Coimbatore, thalassemia, which is a blood disorder, where they require transfusions twice a month. And oftentimes these kids are traveling just because, they don't have, the local facilities don't necessarily have leukocyte filtration bags or Coombs kits to test. These kids are traveling 2 days to get to another facility and that's twice a month, where they're going with their parents. And these are the people who need to work to earn a living. And that's how they get transfusion. So we're trying to assist them by providing all these resources to the local facilities to simplify it so that, it isn't a struggle. Simple things, these things shouldn't be struggles. And so we're essentially identifying the gaps and seeing if we can provide financial assistance. So mostly healthcare, some education initiatives, and we're trying to scale it as much as we can.
That's so cool. Yeah. Well, thanks for doing that. And if we can help out in any way through the Physicians and Properties community, please let us know. That's really cool. I got to do a few mission trips and spend some time in Africa and Zimbabwe for 6 weeks working at this rural hospital, and a similar experience. And I think that spending time in those communities and really seeing the struggle that folks have to deal with on a day-to-day basis. Like, for example, we had a guy who was just walking to work and got attacked by a crocodile. I mean, that's not something that we would ever think about in the States. And so I think seeing how blessed we are here and having the opportunities to go see some of these third world countries and really help and serve those communities is just amazing. And I think everyone should have those opportunities to see how blessed we are and how important it is to give back. Thanks for doing that. That's incredible.
Yeah. And interestingly, Alex, this is a story I've told before. It's funny when you talk to these kids, right? And I spoke to one of these children, and they have the typical thalassemia facies, the cheekbones and stuff. And I asked her, what can I do to help you? And this is the human spirit. She says, well, I'm fine, but I have a friend outside and she had an amputation. And so she was like, I need you to help her. And it just got me thinking, all of us, we're really in our hearts. This is how we're wired, right? We want to help other people, but we're not in a position to do that unless we help ourselves. And I think that's where the whole concept of financial freedom comes in. I would have spent time on these initiatives maybe 20 years down the line if it weren't for my ability to get to financial freedom. And so I feel like we all want to do so much and we're capable of so much more. The financial freedom piece just opens so many doors for us.
Yeah, it really does. That's so cool. And I think I'm interested to hear if you have similar insights, but when I was there in Africa, it was really interesting to see how focused they were on their family unit and spending time together in relationships, and how materialistically they were so poor, but relationally they were so happy and so much happier than we are here in the States. And I'm interested to hear if that's been your experience with traveling, but I think it's just really sets the tone for hey, these are the things that really matter. It's relationships, it's family, it's quality time together. And it's something I think gets lost here a lot because we're all really focused on our cell phones and technology and hustling.
Yeah, I mean, and that's so true. The honest truth, and we all really know this, is that material things are never the source of our happiness. Happiness comes from the sense of community and from our ability to really help others and serve others. As long as we're focused on ourselves, we're really not hitting our human needs, a need for significance and the need for connection. All of those needs, none of those needs are actually met by material things. Now, freedom does give you the time to have those connections, to do those things where you can be significant, but you don't necessarily always need it. And you were absolutely right. And I don't know if you watched this episode on Netflix where they talked about people who live to be 100. A lot of times, a big part of that is physical activity and having the community. And so In most of these countries, it's very spiritual, so it helps people ground themselves. And then it's also about these big family units. So you have tons of support and you have connections. But even over there, and I come from a small village, both of my parents come from neighboring villages in India. I think the way things were 20 years ago, things are transitioning. We're moving more towards smaller family units, moving more towards more material satisfaction and isolation. And so we are beginning to see more of what we're seeing over here, mental health issues. But yeah, when people don't have a lot of money, then you have no option. There isn't that much isolation. You are in larger families, extended families living together. And so there's huge value in that and a lot of support.
Yeah, absolutely. Yeah, very important. Well, thanks for sharing that. Thanks for your insight. Sorry for kind of the tangent there, but I think that's an important conversation, just as important as real estate to have. So I appreciate that. I want to be respectful of your time. So I did want to ask, if I was a new doctor, new attending who just graduated residency, and I wanted to get started investing in real estate, what's one piece of advice that you would give?
I would say, we talked about the community part, and I think that's so important because the people you surround yourself with, that is going to transform your life. But I think the most important thing is to start before you're ready, because you will never feel ready. It will always feel like a leap. And sometimes you just have to take that leap of faith. If you can educate yourself, that's great. But, honestly, sometimes there's analysis paralysis and you're just educating yourself and you feel like you need to learn more. So I would say the most important thing is start before you're ready. Just start. And as that first property does set you free, that you will have so much learning happening from that first property. And even if it is something where you haven't been able to do complete due diligence, in the long run, real estate is very forgiving. And I've heard the saying before, a good property becomes great with time and a bad property becomes good. So as long as you have the right kind of debt. Right now, debt is a whole different issue. But for most people, if it's a single family home, a long-term fixed 30-year loan, there's very little that you can do that can make you lose tons of money. So just get started and you will learn as you go.
I love that. That's great advice. Well, Dr. Bala, if folks want to join Generational Wealth MD or they want to find out more about you, do you have some good contact information you'd be willing to share?
Yeah, absolutely. GenerationalWealthMD.com is our website. We have the resources section where we have tons of free calculators. The guide I spoke about, that's great for anyone who wants to learn to invest passively in syndications. That's generationalwealthmd.com/guide in lowercase. There's a free ebook on our homepage where I go over numbers for those of you who are thinking, well, how is it possible to do 200% ROI in 6 months? So I actually have numbers in there. Take a look at that. I think it's very eye-opening. I wish I'd known this stuff like 10 years ago. I would have hit financial freedom 10 years ago. I think those are great resources. And then gwcapital.com, capital with an A, is our passive investing libs. If you want to go explore that, feel free to do so.
That's awesome. We'll be sure to put all the links for that in the show notes. And then you offer coaching services twice a year, you said. When's the next time that's going to open up?
So we start in April and in October. So if anyone's interested in learning more about the program and getting on the waitlist, it's generationalwealthmd.com/waitlist in lowercase, just one word. And yeah, there's some information on there. And this way you get notified when we open up next time.
That sounds great. Well, sounds like a great opportunity for folks. Dr. Bala, thank you so much for your time. I appreciate you coming on the Physicians and Properties podcast tonight.
Thank you, Alex. This was a pleasure.
Awesome. Thank you. Take care. With that, it's been Dr. Bala, Dr. Alex Чло with another episode of the Physicians and Properties podcast, signing off. Hey, real quick, if you're still listening to this, I'm assuming you got value from it. So I need your help specifically. My 2-year vision with this podcast is to help 100,000 physicians learn how investing in real estate can give you the freedom to practice medicine and live life how you want. There are 2 main ways that a podcast grows. One is through ratings and reviews, and the other is word of mouth. If you can please leave me a 5-star rating and review on Apple Podcasts and Spotify, as well as send this to 1 to 2 friends that you think would get value from it, we can reach the physicians that we want to reach. Thanks in advance, and talk to you on the next episode. Please note that the information shared on this podcast is for informational purposes only and should not be considered financial, medical advice. The views expressed on this podcast are those of the host and the guest and do not necessarily reflect the views of the Department of Defense or the United States Air Force.